Hello, happy Friday. Thanks for joining. We are just getting rolling with the webinar for today, hosted by the Friendly Lawyers Association and brought to you by Messenia Advisors. Messenia is a local outfit out of Des Plaines, Illinois. If you haven't heard of them, they provide services for your accounting and they love to work with small business professionals. So they were happy to pay for the costs of bringing you this webinar today, and I told them I would mention it. So thank you, Messenia Advisors. So Friendly Lawyers Association, if you haven't heard, my name is Dana Zivkovich, and I organized it probably about 12, 13 years ago. We are a collaborative social network for small firm managing lawyers, and we like to offer resources for law practice management, opportunities to grow your network, and we have an exclusive referral network too. So all of that can be found on our website, friendly-lawyers.com, if you'd like more information. Today's webinar is about cyber liability, and we are happy to welcome Adam Czerwinski, who is also an attorney and the owner of Sidebar Solutions, Sidebar Insurance Solutions. Sorry about that. Sidebar Insurance Solutions is basically going to solve all of your insurance problems and keep you covered, whether it comes to malpractice, auto, home, or life. Is that right, Adam? Adam's on.
Yeah, the business as well. Yeah, workers' comp.
Anything you need, I think Adam's your guy. So we're going to talk specifically about cyber liability today. I think it's very timely considering everybody in the universe is on the internet. And I'm going to bring Adam up here we go. Welcome, Adam. And I'm going to minimize myself to let you go ahead and get started, and I'll pop in when I have a comment to make. Okay.
That sounds great. Thanks, Dana. Really appreciate it. I mean, Friendly Lawyers is a fantastic group. You guys hopefully will all take advantage of all the great stuff that Dana's doing for our industry. All right. So just a little bit about myself, really quickly, I'll start the presentation and bring that up. Let's see here. Are you guys seeing the presentation? Let's start it right now. Here we go. So here's the presentation. We're talking about thinking beyond malpractice insurance. Obviously, a lot of people, when they practice law, that's the main thing they think about is where's my malpractice insurance? How does it operate? Those type of things. And we can certainly answer those questions for you at Sidebar. But today's presentation that Dana asked me to talk about is cyber-liability insurance, which is really kind of at the forefront of new insurance products out there. It's a very rapidly developing area. But given the amount of time and the amount of data that we share and spend online, particularly during the COVID pandemic, cyber liability insurance is even more important. So let's move on to the next thing. So a little bit about myself, just so you know about me. I'm actually a lawyer, as Dana indicated. I graduated from Chicago College of Law and passed the bar in 2006. I went to work for Allstate Insurance, working in-house for them as a litigator. Then I went to work for Polanski and Seashaw, a small or a medium-sized plaintiffs and workers' compensation claim litigation firm. And then lastly, I worked for an insurance counsel at a technology company managing their litigation risk. And after I had done that, I had caught the entrepreneurial bug. And one of the things I noticed with all of my clients throughout my time is that they understood insurance after they needed it most, but that's the last time you actually need to understand it best. You actually need to understand it when you're purchasing it. So that's really been my mission and my goal in launching Sidebar Insurance was really to improve people's understanding of insurance and allow them to better cover themselves by offering them different options. And to that end, let's talk a little bit about cyber liability. So, and the goals for today. So the goal for today's presentation is really to answer 4 questions and allow you to fill in some extras. So number 1, what is cyber liability insurance? What exactly does it cover? How does it operate? What does it cover, right? Number 2. Number 3, how does it work? And 4, where can we find it? Because it actually comes in a couple different areas, and it'd be interesting to think you may even have some cyber liability coverage right now without even thinking about it, albeit it may be super low, so you should know what you have so you can fill in areas where you may be exposed. And then lastly, like I said, we want your questions to clarify anything you may not understand about cyber liability. Before we start with the first question, I just want everyone who's here take a deep breath. Insurance is not the most exciting thing to talk about. In fact, it can create quite a bit of anxiety This presentation is not meant to stir up any fears or scares. This is all stuff that we can help you with, and just make sure that you're informed about it so you can make good decisions for your business, for your livelihood, and for your employees, and for everybody, and for your clients, right? So just take a second, realize that it's coming from a place where we're here to help you, not to make you scared or make you guys a little heart race a little bit. So let's try a fade. I'm just going to mix it up. What is cyber liability insurance? So really quickly, cyber liability insurance is insurance that covers a business's liability for data breach that involves sensitive customer information and or the business's computer systems. All right. So and that liability, understand, comes in two forms. It comes to the client, and it also comes to yourself. Right? So you actually have your own coverage. It's called first-party coverage and third-party coverage. And we'll talk a little bit more about that. So in this part, what does cyber liability insurance cover? So there's that third-party coverage. Cyber liability policies can provide coverage for other individuals should their private information be electronically stolen from your care, custody, and control. Now understand, this could be information you've collected from an opponent in a litigation matter. It can be your own direct clients. It can be from a series of classes. Maybe you handle the classes, or whatever personal identifiable information your servers may hold. Okay, and in that way, if those things can get exposed or get hacked, you can be on the hook, either regulatorily or from a litigation sense, for significant damages that come in many, many forms. And that's that third-party piece. The other piece that most people don't realize is you can actually, well, let me stop here and just give you some examples again for the sensitive information your business may hold or your firm may hold. You may hold your client's bank information and be instructed on how to either withdraw money to fill your retainer or how to distribute those funds for transactions that you're making on their behalf, right? You have you have power of attorney and your ability to write checks on their behalf. That sensitive information could lead to some significant damages if they were to hack it. You have your opponent's social security number. You may have medical information, particularly if you're in personal injury cases or managing those type of matters. You may have bank account numbers, not just their banking information, but their bank account numbers. And one of the ones that's I think people often don't think about is you may have their email addresses, which sometimes is the biggest gateway altogether. Because just not too long ago, I was actually targeted because in a firm got hacked and they took their email list and then they sent out false DocuSign-looking documents to them. Right, and had I not been on the lookout and been like, why is this person sending me a DocuSign? I may have provided them with information that would allow them to hack my situation, and it could have led to a loss and a claim against that firm. So it's important to remember that there are numbers of different things that could be exposed that could ultimately lead to potential claims. Okay, so let's move on to the next piece. That first party coverage. So this is that second area you come through. That first party coverage. Cyber liability policies can provide coverage for a business's lost revenue or additional costs that come as a result of cyber attack. So let's think about how that might come into play. So examples of ways. They may lock you out of your computers and threaten to fry all your hard drives. They may cut your phones off so you can't reach or hear from clients. They may force your office to close and lose all the revenue you may have had from that given day. Or you may need to buy new computers from a hack that intentionally damages the computers or infects the computers in a way that can't make them repaired. All of those first-party claims are potentially things that a cyber liability policy could help you cover. It's also important to note that a lot of cyber liability policies, or some cyber liability policies out there, may help you with ransomware from the perspective of they will help you cover the ransom cost to get your hard drives unlocked or get back to access to data that you really need. So the importance of having cyber liability is not only for your customers and your clients or anyone whose data you may have access to, it is also for your own business's welfare, because most business owners' policies, which people look to for business interruption and those things, will exclude cyber attack and will exclude those type of activities. So cyber liability is where you would look for that type of help. So cyber liability is important from those two perspectives in that it covers an area that's usually excluded elsewhere, and it also covers it for yourself as well as your exposure to other people. It's important to remember just one more point on the third-party liability. If the social security numbers or personal identifiable information, bank account numbers are hacked from your system, And it is determined, the Illinois regulations generally, I think the rule right now is 7 years of credit monitoring you must offer to each person whose information was hacked. So 7 years of credit monitoring can get expensive very fast. And those regulations are changing regularly, so please note that that may not be accurate at the time you're watching this, but just note that this is what cyber liability is able to help you with. One of the things that cyber liability policies are now adding that's really important in how they work is that they're offering what's called pre-claim assistance. And what that means is they're providing they're providing businesses with additional advice, but also benefits reports and applications, like apps like phone apps you have, but they put them on your computers, that would help protect your business from a data breach. So certain carriers are doing things, and I'm going to give you some examples, but they're giving you things you can put on your computer to make sure all your patches are up to date, so a hack is less likely, to make sure passwords are updated and are difficult enough to hack, to make sure that you have, if you do have malware, that it can actually intercede and stop that malicious takeover from taking place. These are beyond not just your average secure your antivirus. These are things that are specifically looking for cyber attacks. And so the different carriers, and you're going to see some examples of that here shortly. It's a really big part of cyber liability evaluation. So if you're looking at policies, to ask those questions of what are you providing me in addition to my coverage to keep me from having to use your coverage, because a lot of the carriers are actually doing that. So here's an example of some of the coverages that are provided by, and this is a deck page from a carrier that is out there that we work with on the regularly. But you can see that there's a number of different carriers, a number of different areas that you can see coverage from. So network and information security liability. So that's that third-party claim. Somebody's information has been taken off your network. They will provide you with this one would have $500,000 at a $2,500 deductible. Regulatory defense and penalties. So if a regulatory body comes in and says your system was unsafe or exposed your customers, and therefore we want to do an investigation, they're offering coverage for that. Multimedia content liability. So in the event that something happens where you're hacked and you damage someone else's through multimedia usage, someone else's reputation or otherwise, you may have coverage underneath the cyber liability. And then PCI fines and assessments. Again, these are areas and coverages which would apply to third-party claims that would stem from an attack. You're coming in, Dana. I feel like you have a question.
Yeah, popping in a couple questions as I understand this chart.
Yeah.
So is this $500,000 liability standard, or is that a lot of coverage, or is that minimum for what's going on out there?
So in most cases, we recommend $1 million. We feel like the million's pretty much the standard of what most people were putting out there. This customer that I got, or this example that I had, they opted for the $500,000 based on their evaluation of their exposure and and what they felt comfortable and what their evaluation on the cash flow. And there's a part we'll come to later talking about the policies and why it's important to get the policy rather than just getting the most expensive policy when it fits your budget, because having a policy sooner in cyber liability is actually a more important piece. So if you have to have lower limits for a little while, that's not the worst thing, because you're creating what's basically, you're creating a retroactive date or a look back period that's longer than just the year you buy the policy. So I would say this is a little bit less than I recommend, to your point.
How low do the limits go? Do they start at 100,000 and go up, or? You
can start them as low as 100,000. Absolutely, that's the lowest that's out there. Generally, what we see too, and we'll talk about this in a little bit later, is that sometimes the cyber liability policy is tucked into a business owner's policy or even a malpractice policy, and you'll often see those are more in that $100,000, $250,000 range. If you're buying a policy specifically for cyber liability, we like to see that in the $1 million range, just because that's the purpose of the policy and that's the type of limits that you'd want to have to feel comfortable.
Okay, and I don't know if you also covered this subject or this question, but I know with, like, let's say car insurance, you have the per incident and whether that goes against kind of an aggregate total. Would you just remind me, when we're looking at these limits, is it 500,000 for each of these, or is it 500,000 umbrella total coverage, but if you had 100,000 from A, B, C, and D, you've used 400 out of 500?
Yeah, great question. So what, unfortunately, the way that this particular deck page is laid out. On the page 1 of the actual policy, it says the aggregate limit is laid out, and I believe in this case it would be $1 million. So if
Okay.
and I may be wrong, they may have it at 500,000. You can choose that. It's certainly an option you can work through. But when you see things like limit/sublimit, it means you can use, like for instance, in this case, if it was a $500,000 aggregate limit, you could use the entire limit on network and information security, or you could use the entire limit on PCI fines. But once you used it, it was exhausted. So it would be the collective limit would be that $500,000. If the aggregate limit was $1 million, then you could max out on 2 or 3 of these, and it would, in the aggregate, take away from that limit of $1 million, the aggregate limit. So you're right to ask that question. Unfortunately, it's not on this. It didn't fit on this diagram.
Sure.
But it's certainly part of the policy.
When we're looking at these 4 topics that they've identified, are certain ones more common?
Yeah, so I would say that as you go down, they become less common, right? So the top one is the network and information security liability. That's just the basic liability to third parties who have been hacked or have been exposed due to your cyber liability exposure. And so each of these, the regulatory defense, comes into play once there's a number of people who come out and say, hey, there's been a hack and my stuff's all over the internet. And then the regulators come in. It's less likely for the multimedia content. That's really like it's a pretty decent sized hack to get that far for them to have create a multimedia exposure. And then the PCI fines and assessments again are the kind of last bit. So I would say as they go down, they're less likely. Doesn't make them less costly though, right?
Sure.
So anytime the government gets involved during that kind of
multimedia piece, I think I have a good handle on the others, but what's the multimedia?
Yeah, so what can happen sometimes with hacks is they'll put things onto your either website or they'll make modifications that then damage or hurt someone else's reputation through taking their copyright or their stuff, and then it becomes you're liable for that content having been on your site, right? So it can create a situation where you have, you've been hacked or something's happened or you have infringed on someone else's multimedia rights. Again, it depends on the policy and how it's written. And that's one of the things that's really key on this. So it's important to look through that. But the multimedia content, meaning like if you're using content or someone hacks into your system and uses content in a way that negatively impacts somebody else, you may have an exposure from a cyber perspective. And this was a place where you may be able to find coverage.
I see. Okay, thanks.
Yeah. So, those we were dealing with the third-party coverages. Now we're moving down to the next is the first-party coverages. How your business or how your own company can actually thrive or recover from a cyber attack using your policy. So we're talking about breach response, crisis management, and public relations, handling the media, right? If it's a big deal out there, you can even have funds that are towards that. Cyber extortion, that's that situation where they're locking you out of your servers, locking you out of your computers and threatening to fry them all if you don't provide them with some level of payment. They also talk about business interruption, meaning your business is shut down. You're not able to access. There's a damage and you've lost income because your business has been locked out of its computers and its ability to work. There's also waiting periods and enhanced waiting periods, meaning you don't get it from hour 1, you get it from hour 9, right? That your business is out of work. So usually it's 1 day if you've been locked out for more than a day. Excuse me. Digital asset restoration, meaning like if you have, it fries your hard drives or something and they need to go in and actually recreate the hard drives and recreate the data and the information that you had on your system. That can be something that you go to. And then lastly, funds transfer. Like if you were hacked in a way that allowed funds to be taken out and sent off to a third party, which happens quite often, there may be coverage for that as well. It's important to note that there is a line between crime and cyber. And it's a difficult one sometimes to navigate. So for instance, there's been a rash of phony invoices being sent to law firms or phony invoices that have been sent out on behalf of law firms with instructions to wire money to bank accounts that are not the law firms, or the law firm sends money to none. Those can be considered crime or they can be considered cyber, right? How are they transmitted? Were they transmitted in mail or were they transmitted by email? So it's important to kind of keep those things in mind and have a conversation about what's your exposure and what it looks like in your firm to make sure that you have the coverages in both places, right? Is crime something that you're concerned about? Is cyber something you're secured about? Okay, make sure you have the coverage there so you know you're going one place or the other. And then we see a price lastly for that pre-claim assistance, and we'll get into that here in a second. Alrighty, next, let's Sorry, I'm just got to go to the slides. I was off the tab. Here we go. How does cyber liability policy work? So really, it's important to remember that a cyber liability policy is different than your normal home, auto, and even business policy. It works on what's called a claims-made form. Claims-made forms ask different questions than simply a straight home, auto, or business policy. It works very similar to your malpractice policy. So if you have a malpractice policy in your firm, a lot of these concepts will actually apply there. Unfortunately, too few lawyers actually understand that a claims-made policy is how both cyber and legal malpractice work. So we're going to go through that. So the three key questions in a claims-made policy is, what was the retroactive date? When did the hack or the cyber liability happen? And then when was the hack discovered? Because those are two separate things. It's not like you may have a hack or some kind of vulnerability that takes place and it's not discovered to 2, 3, 4 years later, right? And so you have latent risk that's inherent in that. It's one of the reasons we talked earlier about having a policy in place sooner rather than later, because that retroactive date is the date in which you first have policy and have maintained a policy throughout, such that you can go back in time to the date in which you first bought the policy and have coverage for all of the acts and all of the time after that, up until the time the claim is discovered, presuming you've maintained coverage throughout. So let's talk about that, because it can be a little confusing. And so I think I put some slides here to explain it. So this is an occurrence form policy. Let's just talk about auto insurance. It's pretty basic. I think everyone can grapple with this one. Let's say you buy an auto insurance policy on January 1st of 2015, and then an accident happens on that May 31st of that year. Later, a claim's filed with the insurance in 2016 after that driver has switched auto policies to another carrier, or even just the same carrier, different rules, or different liability limits. The claim is filed that next year, and then finally they switch policies again in 2018 after a suit is filed, but before the trial, and the trial eventually starts in 2018, in February of 2018. So the question here is, which policy would cover the accident? And the answer to the question is, sorry, skipped ahead, was policy A. The policy that's in place at the time of the occurrence in auto insurance policies generally covers the loss. So whatever terms are on that policy, whatever deductibles are on that policy, whatever liability limits are on that policy, those apply, and it's frozen in time. What's a little different when you have latent risk. If you hadn't known there was an accident, right? It'd be a different consideration. But that generally doesn't happen in auto. It does happen in cyber, as we talked about. So we talked about cyber liability. I apologize, the caption wasn't changed to be a malpractice. It says malpractice, but it means to be cyber. But let's say you buy a policy on January 1st of 15, and with that 1/1/15 retroactive date, the system gets hacked the very next day. The attorney is completely unaware. But in December 2nd of 2017, the information somehow arrives on the dark web. They're able to trace it back and says it's been available and out there since December 2nd of 2017, but no one's aware, not the client, not the attorney, no one knows. In May of 2018, the client learns that the data breach was there. She or he knows where the data came from because it was only given to one person, their attorney. And they allege a claim against the attorney sometime in 2018 for the materials that were hacked out of his system in January of 2015. What policy covers in this example? Well, assuming they've maintained that insurance policy, that cyber liability policy, the answer would be policy C. The policy that is in force at the time the claim is learned of is the one that responds, assuming they've maintained the retroactive date prior to the system being hacked. And this is why it becomes such a big deal to make sure you get a policy in place sooner rather than later, so that that retroactive date, even if it's small, that retroactive date can start then. And as your business scales, as your cash flow increases, as your exposure increases, you can build the policy up. And it will, those higher limits that you build later on and the better coverages you layer on will still cover hacks that you may not even know happened several years before. Now, if you do know they happened, that'll be a problem. But again, assuming you don't do it, you're not going to commit insurance fraud, you're not going to lie to them about that, because every application will ask you if you know of a hack or some kind of reason there would be data on the web. Assuming you're not going to do that, you should be in good standing to have coverage under the policy. Currently, because of the state of cybersecurity policies. And because of how new and innovative the space kind of is, most carriers, if you buy a cyber liability that is standalone, will give you what is known as full prior acts. And what full prior acts means is, we don't care how far back the hack occurred, we got you. They'll cover it, but I expect that this won't last long. As the data hacks and as these systems become more sophisticated, they're going to be able to identify the dates of hacks. And as they're more sophisticated in identifying the dates of hacks, they're going to try and exclude some of those risks. So right now, because the businesses and the industry is so cutting edge for insurance, which I mean 10 years is cutting edge in insurance, you are seeing a lot of policies that are full prior acts, which means you can go back as far back as possible. You just need to buy them now. Okay, you need to buy them before these companies get to the point where they feel like they're going to start putting a start date on their coverage.
You could go back to before there were computers?
In theory, yes, right? I mean, you could say, look, I was hacked in my cave. There was some numbers on the wall. It was a drawing of a bison. They could theoretically, that would be true, right? As long as the hack was claimed during the policy period. But obviously, I mean, that's kind of far-fetched, right? But the truth is the firm that's like, let's say you have a firm that's 30 years old right now. Who knows what happened, right? Who knows what happened to servers that were done back there? Who knows what happened to all that information you may have? And if you get full prior acts on your cyber liability, it is worth its weight in gold to make sure you have that policy in place and those coverages there. All right, so next slide. Oh, special note about pre-claim assistance. This is what I was hinting at earlier on, that we would talk through some of the cool things that insurance carriers are providing to make your claim less likely to occur. And so I got two examples of that. As I talked about, certain carriers are providing additional protections for their insureds as part of their policy. Some carriers provide insureds with a report on information that it finds on the dark web, as well as the security of its network, cloud, etc. What does that mean? So there are insurance carriers who are very familiar with dark web materials and where to look for information that comes from hacking victims. Right, so firms that have been hit, there'll be a dump onto the dark web of all their very important information so that hackers and them can share that information and benefit each other. These carriers are familiar with those spaces, know what to look and where to look at it for it, and can look and scan to see if your business's information may be on those sites. So then in particular, this is a sample report that came from a company called Cowbell. Cowbell's out there, we work with them. They're a really good company. They're pretty new to the marketplace. But they've created a system that actually rates companies compared to their industry, right? So they have an industry standard as far as their cybersecurity levels. And then based upon their ability to go and they look at your website, to look at different things related to your business and your company, they will give you a full report based on what materials are on the dark web, network security, cloud security, endpoint security, what kind of compliance you have, how vulnerable you are to cyber extortion and funds transfer. They have built a system, a proprietary system that they deliver to all of their customers. And as the years go on and as you work with them, they give you advice on how to tighten these things up and make yourself better than the average firm, right? And show you're doing diligence to make sure that you're not going to be a cybersecurity victim and your business is going to be okay. So this is how it comes. It comes on a simple 100-point scale. Industry aggregate for attorneys, professional and scientific offices of lawyers. Industry aggregate limits, we're at 56 out of 100. So not doing all that great, we're kind of middling. But this agency actually is doing a little bit better, or a little bit below, I should say, because you want to get closer to 100, I believe, on their factor. 100 being the highest and representing the lowest risk. So the higher you get, the more points you get, the better off you are on this proposal. So it's just kind of a cool way to think about it. One other company that's out there is actually providing tools that can assist their customers in protecting cyber attacks and liability situations. Particularly, this is a firm called, or an agency called, I shouldn't say agency, it's a carrier called the Coalition. It's actually a carrier, it's actually two carriers came together to create a program. And what it does is it monitors, it has automated threat and intelligence alerts. It monitors for DDoS, which denial of service mitigation, meaning companies coming in and hacking your website, changing an L to a 1, and creating and trying to push unsuspecting clients to a website that's actually theirs and mirrors yours and asks for personal information. Security benchmarking, ransomware protection, patch management. So you're able to kind of plug into their system and provide your business with upgraded security systems and upgraded security kind of protocols, and making sure that, like I said, patches are managed. Your websites aren't being duplicated and being used to collect private information from your customers. I mean, these are things hackers, are incredibly sophisticated in how they're doing their attacks and how they're performing their attacks. And this is trying to provide you with a little bit more robust a platform to make sure, on top of some robust coverages, because they're not only just providing this, they're also providing you pretty strong cyber liability coverage. So the Coalition's a really, really solid product, and I think that what they're doing is fantastic, along with Cowbell. I think Cowbell's doing a great job too. So one of the other things we wanted to talk about during the presentation was, where do we find the cyber liability? Because it's not just always its own policy, and for the most part, people don't buy it on its own. That's the industry that's really kind of taking off and bringing itself to a new place. So where else can you find it? Well, there's really three places. There's three places you can obtain cyber liability insurance. One is your business owner's policy. So if you have a policy that covers your general liability, covers your office materials and property, if it covers your, it's required by your landlord, or it's required to cover the exterior of your building, your business owner's policy can sometimes have an endorsed cyber liability policy. Some legal malpractice policies offer a cyber policy on top of it. This is something Jim Thompson, before I came on and I wanted to give him a shout out, actually asked me about. He said, can you get cyber liability under a malpractice policy? And what we're finding is malpractice policies, whereas before they may have allowed their language to allow wiggle room as to whether or not it was a deviation from standards of care and therefore a malpractice not to have cybersecurity or not to have cybersecurity protections in place. That has been written out of every malpractice policy period now. There is a specific exclusion for cyber liability, so that the policies themselves will not provide you with cyber liability coverage. What they will do is provide you with an endorsement or an add-on piece, kind of like a sidecar, that allows you to have some cyber liability, and we'll get into that more. And then the last one is really the preferred method, which is a standalone policy. This policy is there for your cyber risk and is able to take care of it. So let's walk through those. So the business owner's policies, when you see cyber liability, it is generally limited to third-party claims. It is generally limited to people's network or the people's personal information getting stolen from your site. And generally, it is very small. As we talked about with Dana when she popped on earlier, the amount of coverage is usually $50,000, maybe $100,000. It's subject to a ton more underwriting than actually cyber liability policies and standalone policies alone. A lot of cyber liability policies are basically like 8 questions, whereas when you add it on to your business owner's policy, it's usually 30. So you may think to yourself, why am I answering 30 questions when I could answer 8 and get $1 million for $50,000? Why am I answering 30 questions for $50,000? You're right. It's a fair question to ask. It's because the business owner's policy really doesn't want to write your cyber liability risk, but they understand you have the risk, so they want to offer it to you. So you can't come back later and say, well, I thought that my general liability covered it. So just understand there's usually what's called a sublimit, very low, 50, 100,000. Usually they max out about $250,000 that business owners' policies can allow you to attach on. And again, they're not as robust. They're fairly convoluted and difficult to understand. And so, like I said in the note there, limits are usually no greater than $1 million, and like I said, usually far greater than that. The next number 2 is your malpractice policy. These usually have even lower limits. We're talking 20, 25, 30,000. $250,000 in some cases, but it's usually an extra $500, $700, $800, which for that price, you usually could find a standalone policy that might provide you a little bit more coverage. It's all, you got to make sure you're checking all your markets, but the liability policy that stems from your cyber liability policy that would stem from your malpractice policy are becoming super rare, super expensive, and they're really just there because they're trying to make up for the fact that they used to be kind of in a spot where they would cover you, and now they're excluding it altogether. So they don't want you to come back and say, oh, I didn't know. A lot of things in insurance are written in a way so that they kind of ward you off, right? They show you they don't really want it by offering you low limits, high prices, and a lot of headaches to get it. So keep those things in mind when you're trying to evaluate how am I managing my firm's cyber liability risk. Am I finding it in my malpractice policy? Am I finding it in my business owner's policy? Or am I finding it in the last one, which is that standalone cyber policy? This is the preferred one. Larger limits, more robust coverage, easier underwriting questions and evaluations. They live in cyber liability, so they know what they're doing and they're focused on it, and they're not as risk adverse. Like as I said before, the cyber liability policies that are standalone are worth any additional effort and any additional modest cost increases because of the fact that they're so much more robust. We talked earlier, and I showed you earlier the declarations page that had about 10 different items, the listed coverages. Usually on a business owner's policy or a malpractice policy, the coverage areas are like 1 or 2 lines. Not as robust coverage. There's not as many things they're helping you with, and they certainly aren't providing you that pre-claim assistance that we're seeing that we showed you earlier from like Cowbell or Coalition or even some of the other carriers that are out there. So we're kind of at the question and answer period. I know we've got probably about 40 minutes. Dana, I didn't know if we had too many questions or things people wanted to get into. I can go back if I need to add some more time. I want to make sure everyone gets their CLE.
Well, why don't we start? I know that Jim had proposed several questions, and I want to make sure that we covered those.
Sure.
Do you have that in front of you, or did you want me to?
Yeah, absolutely. Give me 1 second. I can pull it up. So Jim sent over these questions, and I don't know if anybody knows Jim, but he's quite the talker. He's really a great resource for our industry and for people that.
Yeah, Jim is great because he is really looking out for the best interests of lawyers and trying to help them succeed, which is parallel to what we're trying to do.
100%, right? Just same mission and that we have right now. So number one is he asked, and I'm going to walk through all 5 because I think that they all bear in mind. Do malpractice carriers offer this coverage? Cyber liability, he means. And if not, where do lawyers get this coverage? So I think we talked about that a little bit. You can get it with your malpractice policy as an endorsement or as an add-on, but generally it's not as robust or not as thorough. And
well, how many people, let me add on to that, expand on that a little bit. What are we talking about? Are there, 3 companies? What's the market out there?
Yeah, so that's a great question. So there are probably, so I can get up to 12 for a single business. So we can show you up to 12 different carriers. Now, one of the things people have to understand too about insurance is there's really 2 major subcodes for insurance companies. There are the admitted carriers and there are the non-admitted carriers. And the only difference between an admitted and a non-admitted carrier is that the admitted carrier is actually subject to the Department of Insurance and they're subject to the regulations and their oversight. The non-admitted, because they are dealing with some riskier areas, right, and some more larger risk pools that are not just Illinois-centric, they're not subject to it. And you can buy them, it's just you have to do so knowingly, because the only way you can dispute with them about coverage and whether they should come in is in the court system. Whereas with the Department of Insurance, you could file a regulatory thing. So when we go to 12 or 15, you start getting some non-admitted carriers in there, and it's just noteworthy to make sure you're aware that there are out there. There's tons of carriers.
The biggest difference when working with an admitted as compared to a non-admitted is that if you have an issue, you would have a totally different course of action working with the non-admitted. You would have to go through court as opposed to the regulatory agency. Okay.
Well, you still could have to go through court for an admitted carrier. You just have the added pressure of being able to also go to the Department of Insurance to make sure they're handling it correctly, right? So you have 2 avenues that can both exert pressure on the carrier to maybe come around to your side. Whereas with a non-admitted, it's only the court system. And so if the policy doesn't work in the way and the court doesn't side with you, you don't really have any other remedy.
Okay. And in general, are there price differences between admitted and non-admitted?
So it really depends on the policy and the carrier, right? So generally, if you're dealing with non-admitted or exclusively non-admitted, the price will reflect that because it's going to go up because they know that there's not a ton of market, not a lot of competing factors here. Fortunately, with lawyers, a lot of insurance carriers love lawyers. They love writing law firms. They know that they're good clients. They tend to do well. So the expense is general. You generally, in most cases, depending on the field you're in, right, the areas of practice you're in most cases, though, you'll be able to find multiple markets available to write you.
Okay. And I have talked to you about this even personally when it comes to insurance coverage. And that is about the insured's right to either influence the decision or make the decision about who argues on their behalf. And could you talk a little bit about that and whether the insured has any ability to influence that decision? And is it different with cyber liability claims?
Yeah, that's a great question. So generally, choice of lawyer or choice of attorney is a clause that a lot of attorneys are concerned about, certainly with regards to their legal malpractice, right? Because it's so reputational. And with regards to cyber liability, we have to be honest about the cyber liability, though. It's such a niche area. So someone who's going to be defending you or working on your behalf is probably going to be a pretty short bench of who's available and who they feel comfortable with, because they really have to understand how the cyber liability coverages work and how the cyber liability attacks may have occurred and what the damages really are in those situations. So I would tell you it's probably unlikely you'd have a ton of say over it. Now, if it's somebody who may have a conflict with you, like somebody you really don't like or you battle with on the regular and you don't get along with, certainly raising that to the carrier's attention so that they know, hey, you may want to go with your, other select counsel on this one because these two may not get along very well, or there may be, some other stuff going on. They have a say in keeping the damages as low as possible too. So you can certainly bring those things to the forefront. I would just say because of the area and the industry, probably not as robust or not as much control or much influence as you can have in the malpractice world.
Okay. And are there best practices for reducing cyber liability risk?
Yeah, I mean, certainly like working with third-party tech groups, talking to them, offshoring some of the risk, right? Like having indemnity agreements with technology companies that come into your and manage your systems. Those are all things that are helpful. Just understand you're the owner though, right? It's your business, it's your data, it's your information. It doesn't absolve you from the ability to be responsible for these cyber liability attacks. Just know that the more things you can do to make sure it's managed, kept up, and you're working with up-to-date materials, up-to-date software, and your practices. So one tip I'll give to you, and you brought me to it. If you at all deal with transactions that are electronic, so I'm talking about wire, EFT, whatever it might be. This is like real estate. Oftentimes it does this. Personal injury attorneys a lot of times will transfer funds electronically. Anybody who does any electronic fund transfers, and I'm particularly talking about real estate attorneys, have something in your emails that says we will never send you wiring instructions, and put a color on it. And the reason I recommend doing that is because, one, if it's in the footer of every email you send, you will be more likely to people will be consistent and get used to seeing it. And if it has a color in the background and it's gone, they might be a little skeptical of the email. So let me give you an a common cybercrime hybrid cybercrime claim that comes through. Real estate attorney is working with a buyer. The realtor, who is also connected on the emails between the lawyer and the client, gets hacked because he or she is using an AOL.com account that's had a password that's been around for 15 or 20 years. They get hacked. They take the email address of the attorney. They create an email address that switches a 1 for an L, well, whatever it might be, sends the email. They copy the email format and footer exactly, send the email to the buyer and say, have your wire sent to this bank account. This happens weekly. And then money that's supposed to be wired for a purchase transaction is wired to the hacker's personal bank account. And
aren't wires normally handled from like bank to title company?
You'd think so, but a lot of times the title company and the attorney are working together, and so the information is provided from the title company to the attorney and from the attorney to the client. And if they're not telling their client right off, hey, I'm never going to send you wiring instructions, you'll only get the wiring instructions via telephone from the title company or whatever way you set devise as being the safest, some hacker will try and kind of get involved there and tell the buyer to send their wire to their own bank account, which is super scary. The other one I would be mindful of is, and particularly for professionals who maybe do tax or do those type of any type of overseeing of the books for their clients, There's invoice fraud is on a huge jump right now, whether it's employees within the company, employees within the firm, or even outside third parties creating fake business invoices and sending them in and hoping they never get caught. Happens regularly. And the question is, if it's transmitted over the computer, is that cyber or is that crime? And so again, having fail-safes and systems in place where you're notified or you're calling ahead and you're saying, you're dealing with money transfers only in certain forms that can't have to have either dual authentication or voice in direct contact involvement can be a big no-no. So anything with wire transfers, I say take it off your computers and tell them you'll never do it that way, because it's just too easy to mimic an email and to make it look like you sent it.
Mm-hmm. Do any of these cyber liability policy companies also offer like some sort of malware or other application that you could download and have running on your system to help reduce?
So I mean, like general antiviral stuff, like making sure your antivirus is up to date, keeping those subscriptions up and running, whether it's Norton or McAfee. Those are pretty good and basic things.
Well, no, do any of these companies provide that as part of their policy? Do they offer?
That tool from Coalition operates in that fashion. So it's basically a system where you would load it you load their application onto your computers, and they're able to kind of keep things and monitor things and then report back to you. I think it's web-based, the way it works. So you initially log into the website on the units that you're using it on, but then there is a piece that because they know the machine numbers and stuff that you're working from, that they keep those patchwork and stuff up in that fashion. So there is a piece. And understand too, a lot of the middle market, meaning businesses over like $1 million in insurance or revenue and those type of things, like those higher level, which lawyers generally don't funnel up into mid-market. They usually are small market firms. They've been having these kind of benefits for a while. We're just now seeing the cyber-liability insurance providing these additional things in the recent years. So
okay.
It's been pretty exciting to see these kind of adaptations. But to answer your question, yes, there are carriers who provide those additional sources.
Okay, so that's probably a trend that will likely continue as this grows.
Yeah,
and that segues into another question that was asked in the chat, and that is, are there certain requirements imposed on the insured? Like, for example, keeping malware in place? Otherwise, you could lose coverage?
Great question, right? So everything delves from the app. The application is going to be key. So as long as your application and your renewal application that you fill out each year is accurate and up to date, and if they ask, are you keeping the thing? And you say yes, and at the time you have it, that's the only requirement. There have not been policies that I've seen that have come that said this policy is contingent on you keeping up X, Y, and Z. They will ask you about whether you have outsourced resources. They may ask you about who's managing your passwords or what's the frequency, depending on how intricate the application is. Just keep to those processes. Do you have, excuse me, a protocol? Do you have a information security, manual that you keep in your office or procedures you keep for your team? They may ask those questions. If you don't and you lie about them, you may jeopardize your coverage. If you don't say flat out, no, I don't have them, and they still offer coverage, they can't come back later and says, oh, you were supposed to have it without some kind of condition. So generally, no.
To having a cyber liability policy, is there any advantage to presenting that to the carrier?
Certainly, it's not necessarily with the carrier, depending on again, if the carrier wants to see it and shows that you have it and gives you a credit for it, yeah, there's a benefit for that. Some carriers will take that into account. The other part too is just showing your diligence in if you were to have a claim. So let's say you do have a situation where you get hacked or you have something happen and you say, look, we had this policy and we followed it and it was, we kept it up to date. There's a lot and the other thing we keep in mind is there's a lot of other states where personal identifiable information is much more robust in their definitions. Illinois is not as robust in what things are considered to be private information. So GDPR is one thing that people are constantly talking about. It's the European standard. New York's starting to adopt it a little bit. It hasn't hit here yet, where you're going to have to show your policies and procedures. But I don't think it's an if. I think it's a when. So I think it's coming. So if you're doing things like building out those policies, taking time to look into the GDPR requirements. And I wish I knew what GDPR stood for. I'll be frank, I do not. My wife would probably throw something at me. She's in information security, so she's probably like—
points for anybody out there in the internet world.
What GDPR is, throw it out.
you get the title of the winner for the weekend. If you know
Yeah,
the
absolutely. But those things are coming. So just getting ahead of it may be a good thing.
Yeah, well, what I hear you saying is that if you take the time to put together some sort of policy, so you've now kind of thought about some contingency plans and how you want to handle it if X happens, maybe you get a credit, maybe not. But by having that policy, if there's a potential problem down the road and you are involved in a claim and a lawsuit and you're defending, you then have information that you can give to the person defending you, saying, this is what we did. This is at least you have a thought out process, which may help your claim down the road. So I guess that would be the real benefit in putting the time in right now to put together the policy. Right?
Yeah, I think it's a double-edged sword too, right? So if you break from it, though, the question is are you admitting that you did something wrong, right? So there's two sides, but my recommendation is it's better to plan than plan to fail, right? So like having a plan and taking the time to think about how you're doing, what steps you're taking, having a policy in place that's going to cover you if something falls. That's why we have insurance, right? We're fallible. Humans make mistakes.
Sure.
So it's important to keep
people are having insurance. I mean, can you throw a range? What's a range of a cost for cyber liability policy? Maybe nobody has shopped around and, you just really don't have a feel for if we're talking about $500 a year, $2,000 a year, $5,000 a year, for like your small business. I mean, you know what I'm talking about. You've got a small law firm and kind of an average book of business. What are we talking about for cyber liability for a $500,000 policy?
Great question. So I'm actually going to pull up a couple policies on my side, and I'll just give you an idea of what they look like from a cost perspective. So this is a firm. I'll just give you a rough description of how the firm works. This is a smaller solo firm, right? One person, probably about. The one thing that they rate your insurance based on is the number of what they call records, and basically records equates to clients. How many clients' information do you have, right? If you're a huge firm that's got like 1 million clients, more expensive, you have more risk there. If you're a smaller firm that maybe over 5 or 6 years has 30, 40, 50,000 clients, it's still a lot, right? But it's not as many. If you're talking about 3,000, 4,000, obviously more reasonable. Sorry, this is taking just a touch longer than I expected for it to load up. But I would expect it to be anywhere from between $400 and $1,200, depending on how fancy and how many bells and whistles you strap on. So it's not a super expensive.
You're saying that's an annual premium.
Annual.
Okay, $400 to $1,200 annually.
Depending, and when you're on that low side, in the $400, $500, $600 range, you're talking about lower limits, but you're establishing a policy that either has full prior acts from the beginning, or starts that retroactive date sooner. So it's just basically you're buying the policy, and this is a strategy I use a lot of time with my clients on malpractice as well. Is when you're starting off, you buy the smaller policy just so you can hold that retroactive date. And when things get cooking and your business is bigger and you have more to lose, you build that policy up, and you can still have that bigger policy apply to those leaner times, because you have that retroactive date in place. And if they ever pull full prior acts off the table, if you have a policy that has it already, you're in a much better place to keep it. They're not going to want to give it to someone who doesn't have that. So
yeah, I was just trying to say, are you grandfathered in, do you think, if you have full prior acts since the Stone Age, and then they stop offering it to new insureds, new customers? I mean, are you saying that you're going to be grandfathered in with that provision that you signed on for earlier?
So I'm not going to say I can tell you what the future holds, but I can tell you you're more likely to have that than you're more likely to be able to keep that, particularly if you're with the same carrier and you've maintained coverage with them. Now,
yeah, because when these policies renew, are they ending and totally you're restarting a new policy, or do these policies renew upon original terms? Like, you get a cell phone contract and you have this automatic renewal unless you cancel, but you're renewing those original terms. Or like my favorite story, which is my health club. Believe it or not, I pay $66 a year.
No way.
$66 a year. Because it started out with like Women's Workout World, which was like 3 decades ago. and I never let it lapse. So then it became, you know, Bally's and LA Fitness and everybody else. But my question is that how the insurance policies work? Do they renew original terms, or do they end and then you have to kind of start a new contract?
So the laptop, so the way it works is that the policy will renew. There will be a new rate, which will account for how long you've been with them, right? And how it will account for a lot of different things, including the full prior acts back retroactive date. But the price will likely go up, right? So the price goes up and up and up because the period that they're looking at goes up and up and up. Even if they're buying it, even if, like, let's say they have a 19 to 20 policy, there's another year in the 20 to 21 policy. So
right, and that makes sense.
Right. So your policy doesn't restart entirely. Now, can they change terms? Can you change? Yes, they can. Can you change terms? Yeah, you can. And likely that's when they're going to want to see it. You're going to want, so you're not going to be able to change. They're not going to be super excited to change your limits. So let's say you're in mid-year, you have a good year, you feel like you're overexposed. They're not, and your policy renews in, let's say, January, and you're in August, and you're like, I want $1 million now, and I've been working with 250. They're not going to likely let you do that because their thought is you got a claim and you know it's coming. And that's why you want to raise it. The time they're going to let you raise that coverage is at that renewal. So you can ask midterm. It's likely going to be a no. They'll just note it and then quote it for you for the renewal. So just keep that in mind. The policy will renew. The terms may change a little bit. That's when you can change the liability limits and the coverages as well. One of the things that's happening is that a lot of carriers are trying to get off of social media or trying to rate social media risk. So what they mean by that is social engineered risk. So these are people who come in and engineer like that fake invoice. That experience is a lot of times some carriers want it, some carriers are not okay with it. But a lot of carriers are talking about adding it later on when they figure out how expensive the risk is going to be. And so at renewals when you might see that, right? So it's just something to keep in mind. It's something to review with your agent when you get the renewal. Hey, how's this policy changed, if at all? And then also, aside from price, like what is the price at? How does that work?
Yeah. Okay. Let me just stop you right here for just a minute, because if anybody else has any questions, feel free to write them in the chat. We are coming up to the close of our 1 hour CLE, but we're happy. I'm sure Adam is happy to address any questions if they do come through. And I also wanted to just mention a couple housekeeping items. You know, we were approved for MCLE credit for this hour, and after the webinar, you will receive an email that will ask you to confirm that you viewed the entire session. And once we receive your confirmation, we will be receiving your certificate and then forwarding it to you by email. Also, I wanted to mention that we typically take 5 or 10 minutes after the show just to keep talking about this conversation and invite people to raise issues. So we are going to stay on a few extra minutes, but this would be the transition that anybody who needs to go could go ahead and log off and, you know, get on with their Friday night festivities. So I wanted to just have a clean cut to let people know that our CLE hour has officially ended, and that we are going to stay on for any additional questions in case anybody wants to. If anybody wants to get a hold of Adam, would you mind, Adam, typing in your contact information in the chat?
Sure. Yeah,
that
absolutely.
way, people can contact you. And there was a file handout as part of this presentation that you could have gotten one of two ways. One was through the email reminder that was sent to you, or it's right inside of this webinar as well. If you go to the file tab, you can download it straight to your computer. And that is essentially another copy of the slide presentation with room for notes.
So if you don't mind, Dana, I see a really good question in the chat, and I just want to kind of address it. So it says, do they raise rates based on more clients each year? So the answer to the question is yes and no. So during the renewal application, they may ask you they may re-ask how many records, right, or clients do you have, just to get an idea of your level of scale. So some cases that may lead to them bumping up your rates, but generally what they do is they have standard and like, hey, between this and this, we rate it this way, right? So between 250 and 499. We're here between 500 and whatever it might be. They can raise that up. So that tends to be more in kind of chunks rather than like, oh, you had 136 last year and you have 142 this year. I'm not seeing a lot of carriers that are seeing a big difference in that. It's just, like I said, they're more concerned how many records do you keep, and then the rates kind of reflect that number.
And did we cover all of Jim's questions? I know we started.
Yeah,
but he
we'll
had
get back to him.
That first question that he asked just kind of led me down a rabbit hole because I thought of all these other things.
So I think we've hit on a lot of them. He asked about whether there were of where to look in their policies for exclusion. So a couple places to look for to see if you already have cyber liability. Again, looking at your business owner's policy. Generally, if you didn't take the time to fill out a bunch of other additional information, you'll see a $20,000 or even a $10,000 cyber liability coverage in the declarations page. The key is looking at the declarations page for your business owner's policy. And same thing for your malpractice. In your malpractice policy, you just look at the declarations page or the certificate that the carrier provided you, and it should say if you have any cyber liability line item.
Or even shooting an email, right? You have an agent that has been working with you, and you say, hey, could you just clarify for me, do I have cyber liability coverage, and to what extent? I think that's also an easy way to get that answer.
That's the simple way of doing it, right? But unfortunately, I think that there's too few. The relationship between agents is one of the things I found when doing this is the relationship between agents and clients sometimes feels a little bit strained, right? They don't feel like they're getting a ton of information. It's one of the things we try and change, is because we need to be a resource for you ahead of time. Like the worst call I get is someone calling and saying, I've had a claim, now what? Like in most cases, I want you to be able to know, okay, you talked to me about X, Y, and Z. If I have a claim, how I should go about it, or okay, let's walk through that, right? So at least you have some familiarity on where to go and the resources that are available to you. So absolutely, agents, your agent should be there. That's what you're paying for, right? Is for that agent to be able to take care of that.
Right, absolutely. All right, well, let's see. If there aren't any other questions in the chat, which I see none, Adam, do you have any takeaways before I kind of wrap it up?
Yeah, I hope this was informative for people. Really, like I said, this is not meant to scare you or to make you super anxious about life. We really just want you to understand the risk that's out there, as well as how you can kind of handle that risk, right? In a way that is cost effective, but also allows you to sleep at night, knowing that you have something to lean on should, you be the unfortunate one chosen by a hacker to be exposed. And lawyers, like I said, unfortunately, two things about lawyers. One, people love to target them. They do. It's just unfortunate. And then for the same reason, people don't really feel bad for them, right? We know how hard it is to build a law practice, to make it successful and to make it profitable, to take care of our families, and how hard we work to get here. Most people just assume it is super easy and now we just, Scrooge McDuck, we swim through our gold coin pools. But the reality is we don't. And we have to manage our risks and manage our practices in a way that protect us for the long haul.
Right. I completely agree. Thank you so much for bringing this information for us. And I really hope that everyone has learned something, and this is, clarified this kind of ambiguous topic of cyber liability. Feel free to reach out to Adam if you have any more questions or you want to talk about your circumstances specifically. And feel free to reach out to me for any reason. So
yeah, fun.
Everyone out there, a great weekend and a happy Friday. And that's it. Stay friendly.
Yeah. Thanks so much, guys. Thanks, Dana.
Bye.